Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 2-hour price chart for Meta Platforms Incorporated, stock ticker META. So as we can see here, we did see a bit of a relief rally for this stock into the end of the Friday trading session. We're running into some short-term support here based on some important Fibonacci zones. So we will be looking at some of these levels in this video to try to identify which levels are going to be most important for upcoming trading strategies. So currently, as we can see here, if we just kind of drill in here for a moment, here we can see that the ultimate low here came in at 442.65. This would have posted during the July 25 trading session, and it was a bit of a spike low. We really didn't get a fat body on this candle, a large body on the candle. So what this really tells us is that it was a bit of a rejection point from these lows. So that's a bit encouraging because this is what sort of inspired this, bit of a relief rally here on a shorter term basis. Remember, this is a 2-hour price chart. So, if we were to drill down to say the 5-minute chart or the 15-minute chart, this rally here would look a bit larger in size. So currently, what we're dealing with here does appear to be a bit of short-term resistance that's coming in at the 23.6% Fibonacci retracement. To arrive at this number, what we basically did was measure the all-time high for the stock, which came in at 542.96. This would have been posted during the July 8 trading session. And then we extend this move, this bearish wave here to the downside, and then look back at these lows from 442.65. Which were posted during the July 25th trading session. So currently, as we can see here, we can kind of move in a bit closer for a moment. And here we can see that, we have broken through here. And on a 2-hour basis, we have closed above this 23.6% Fibonacci level, which really did come in at around 466. But we are seeing a bit of short-term resistance here that's coming in right at this descending yellow line here. Essentially, this yellow line is the 20-period exponential moving average. So this would be the prior 20 2-hour trading periods. A little bit confusing, but it's the 20-period exponential moving average on this 2-hour chart. So we're seeing here that this is creating some resistance for the stock, and we did see a bit of a downside price movement actually into the close for the period. So currently, the level that we're watching to the top side would come in at this would be 469.77, which would have been the high from the Friday, July 26 trading period. And if we do see a break above here, it would be a bit encouraging because that would mean that we also break through this 20-hour, this 20-period exponential moving average on the 2-hour chart. So, broadly speaking, the real question here is, are we out of the woods here? Have we actually found a bottom? Are we done with the declines that have been seen with this stock? To kind of make that assessment, first, we really need to look at the indicator readings in the relative strength index. And here we can see that, we're still dealing with some longer term trend momentum that is in the negative direction when compared to what is being seen in the positive direction. The good news here is that it's not all negative. We are seeing a bit of a positive development here ever since the stock reached these extreme oversold trading conditions during the July 17 trading session. This is when stocks posted that ultimate low, which came in at 459.87 during this session, during the July 17 trading session. And since then, we have seen a bit of a recovery here within the relative strength index itself. So, really what this tells us is that there is a bit of a bullish divergence that is starting to occur in the indicator reading. Really what this means is that the indicator reading is moving to the top side, even while share prices continue to move lower. We did mention that this final price low here did come in at 442.65. So, what this tells us is that, as this indicator reading is moving up, the share price has continued to post new lows. So what we would side with here, even more than the share price action, would be the indicator reading itself. And that's why this would be referred to as a bullish divergence. The RSI can often work as a leading indicator. So it would suggest that, we could be in the early stages of developing a bottom here. In order to make that assumption, what I would first want to see would be a break above the 38.2% Fibonacci retracement of this downside price move. Currently, this comes in at 481.18. And this also coincides closely with this declining orange line here, which is the 50-hour exponential moving average. So if we could see a break above here, I should say, if we do see a break above this level here, roughly 481, this would suggest that we can start to alleviate some pressure from the downside and start to look at some further upside trading gains here. But what we do just need to keep in mind the fact that the longer term, the more dominant trend momentum indication here does continue to be to the downside, and this could be enough to overtake this bullish divergence that we're currently seeing. So, overall, there is a bit of a mixed picture here. But as long as we're able to break above this declining trend line here in the relative strength index, that would be enough to remove this bearish indicator condition. And then it would put this bullish divergence here back in greater focus. There is some scope that this could be happening here, given the fact that the relative strength index has crossed above its own exponential moving average. That's the difference here between the purple line and the yellow line. The purple line is crossing above the yellow line, so that means that there's a positive crossover here. So, there is reason to believe that this downtrend line could be breaking relatively soon. Of course, we're going to need to continue monitoring this in order to make sure that this is actually the case. But there is starting to be some evidence here that we could be close to a bottom in this stock. So here's the current market analysis for Meta Platforms Incorporated, stock ticker META.